Arthur Hayes just said that there is a risk that USDT could become insolvent. China is cracking down on crypto once again, and there are issues brewing in Japan with yields spiking, which could potentially have ramifications for risk assets. So there is a lot to discuss today. Strap in, grab your popcorn. It's going to be a massive, massive show. Before we jump in, quick service announcement. I'm going back to daily shows, short, punchy shows that tell you everything every single day that you need to know in the market. To make sure you don't miss them, turn on that post notification bell. And if you do that and comment Noti Gang on this video, I'm going to be giving 5 people $100 each in tomorrow's video. So after you comment Noti Gang, and of course, make sure you have notifications turned on, if you watch tomorrow's video, I'm going to be posting an email address for you to send proof that you have notifications turned on, and you can win $100. I'm doing this to celebrate the beginning of bringing back the daily live shows. I know I've been doing a lot of content, but we're bringing back this format every single day, and we're going to be uploading every single day at 5:30 p.m. Dubai time, or 1 hour before US Open. So hope you guys enjoy. All right, we have plenty to discuss today because lots is happening in the market. I want to begin with Bitcoin because the price action of Bitcoin, to be honest, has not looked so good. And there are definitely reasons for the market worsening in the Asia session today. We're going to get through those things in today's video because some of it is pretty mind-blowing and then some of it I think is being overblown. So I want to unpack the exact areas that you need to know about later in today's video. But just from a pure price action perspective, without looking at any headlines, it is clear that Bitcoin's exhausted because every time we push to the upside, we fail to maintain positive price action for a matter of days. The bounces are extremely shallow, and every single time we look like we're potentially going to flip trend, we end up coming back down again. This was the most encouraging, the most recent rally, sign that potentially we could start seeing a reversal on Bitcoin. If you watched my video last week, I talked about the POC, the point of control on the chart around 95 to 96 was a key level that we would need to retest and would likely represent significant overhead resistance. The bad thing, and one of the signals to me that the market is exhausted, is the fact that we didn't even come and test that level. We front run that level, rejected, and then we've flipped the noodle again on the H4, which has been a significant bearish indicator in recent times to the downside. So now we've broken back down below and we're in the middle of a range. So pretty much no man's land for Bitcoin until we can flip back above the noodle and the 89K level. I would be pretty wary at the moment. And then of course you have liquidity down here at 81K, which is the next zone to retest. I think by the end of today's video, you'll have a better idea as to where we are going to go next, whether it is the 81K region or whether it is this 95K region. We did see a lot of liquidations on Bitcoin, over $650 million wrecked over the past 24 hours. And we also saw stock market futures starting to fall. This is off the back of what's happening in Japan, which we'll get into, but it has spooked markets and risk assets in general. And then in parallel to that, you have seen gold rising. It's actually broken back out of this daily wedge, and you're starting to see gold gunning for all-time highs again. It's pretty remarkable, honestly, that this dip on gold was eaten up. I think the consensus was, and even I thought that it would maybe take a few months to just chop and consolidate a little bit before pushing on its next leg, but it's happening sooner rather than later because there is so much volatility in equities and risk assets right now. And I think overall, as you can see through this graphic in front of you, I think 2026 is going to be a volatile year for markets. I know we have 1 month left in 2025, but I think looking forward to this next period in the market, I think it's going to be very, very different from what we've seen throughout the course of this year. This year, Bitcoin overall, apart from the last few months, the NASDAQ and risk assets in general have been going up. Gold's been going up. And it's been a year of price discovery across many assets as a lot of indexes have been year to date performing between the 30 to 50% returns mark. However, I do think heading into next year, that regime is going to slightly change due to some of the current variables in the market. We have the AI and tech bubble risks because valuations have crept up so high. Any sort of earnings miss from Nvidia or these big companies can cause ripple effects through the market. We have significant commodity volatility. Recession odds have started to increase, and there is a general shakiness in the market with inflation continuing to be an issue whilst we are cutting rates because we need to protect the economy. Monetary policy shifts are going to be rampant, especially with the changes coming in terms of the Fed chair. You also have midterms next year as well. The debt crisis is always there, but US debt continues to creep up. And of course, geopolitical tensions begin to rise, especially with the current AI arms race that we are seeing. So all of this combined, I think, sets up 2026 for a very interesting year. We know that global liquidity throughout 2026 is likely going to rise, but there are all these other factors which are mixed in as well. So if I had to give you a bit of actionable alpha from this observation, what I would say is there are going to be periods next year where there are extreme downwards volatility events which cause pressure on prices, especially with risk assets. There are also going to be extreme upwards volatility events where you see risk assets performing very, very well. I would be looking to swing trade throughout the year and take advantage of buying fear and selling extreme periods of greed. You will likely at points see lower prices than we currently have now. You will also likely at points see prices that are higher than we have now. I think balance of probabilities, we end the year higher for risk assets, but it's not going to be a straight line to the upside. There is going to be a lot of volatility, and I just wanted to mention this today to prep you for what's coming. And I think by the end of today's video, it's going to be clear some of the variables that are impacting the market right now. I would say that the situation is a little bit shakier than it was at the start of the year when Trump was coming into office. And since then, we've obviously seen a lot of growth throughout risk markets. But the first thing we need to discuss, because it was the big trigger for this Bitcoin dip and the subsequent liquidation event, is what is happening in Japan. So we've seen Japan's 10-year government bond yield has surged to 1.84%, its highest level since April 2008. As Kabisi Letter points out, this chart is concerning to say the least. Basically what's happening right now, I'll try and explain it as simply as I can, is there is a yen carry trade which has been ongoing for a number of years. And this is essentially what the carry trade is. In the past decade, you could acquire cheap yen because interest rates were extremely low. So because yields were near $1, you could borrow cheap yen. Then investors would leverage this trade in order to buy stocks and assets from emerging markets. This liquidity flowed into risk assets and propped up markets, not just Asian markets, but also crypto and also US equities as well. However, now what we are seeing is a significantly rising 10-year government bond yield, which implies that borrowing costs are going to rise significantly. What happens if the Bank of Japan raises rates is it puts pressure on this trade, as a lot of the investors that have leveraged cheap yen are going to have to repay the loans on that yen. So a lot of these investors that bought stocks and bought assets in emerging markets are now going to be forced, as rates go up, because it puts them under pressure, because now their repayments go up, to potentially sell assets, an unwinding of sorts, to cover their position. Also, borrowing yen now becomes more expensive, so on the other side of the trade, there is less demand for these assets. So there's an unwinding of sorts that is currently occurring in the market, which experts worry are signaling signs of 2008 financial stress and could cause significant volatility across risk assets, and obviously that extends to crypto. As you can see, Zero Hedge says here, Japanese bonds are puking on renewed expectations of a rate hike. Since 2-year yield above 1% for the first time since 2008, and Nikkei tumbles. And since Bitcoin always correlates with anything that's down, we have a 4% dump in Bitcoin and Asia trading. So we know that Asia has been a weak session in recent times, because a lot of the OG whales were selling. This has been extended with the Asia sell-off today, front-running the US session. Now, I guess the question is the Bank of Japan really going to raise rates? Because the more aggressively they hike rates, the more aggressively the carry trade could unwind. Now, the latest estimation is that there is roughly an 80% chance, according to markets, of a rate hike at the December 18-19 meeting compared to 60% last week. This is obviously the reason why we saw the bond yield spike and is why we saw risk assets sell off. However, of course, like any Fed meeting, it's not just the rate hike itself that's being priced in the market, it's the language around it, it's the reaction from the Bank of Japan, it's their future plans. All of this is going to come under scrutiny in the December 18 to 19 meeting. Now, in my personal opinion, it is a risk. So I do think this is a risk, and of course, pressure on Japan could signal greater systemic issues for the market overall, and is clearly going to lead to some selling. Whether it is a catastrophic risk that's going to blow up the market, I personally don't believe that, but I think it's a risk to be aware of, and is another reason, alongside the price action in general, and alongside the fact that we have had a relatively tight liquidity environment over the past few months, and that's not going to expand until mid next year in an aggressive manner, in my opinion. That creates an environment, in my opinion, for markets to be a little bit slow heading into the new year. We also know that equities are being viewed as slightly bubbly at the moment, which is also putting pressure on valuations and is limiting the bid a bit. And what it also means is that markets become a bit more reflexive to the downside because people view equities as overvalued or highly valued. Any sort of downwards pressure, so any news coming out of Japan or any sort of FUD or macro event, it's putting further downwards pressure on prices, at least more so than usual, playing back into the theme that I discussed before, that 2026 is going to be a volatile year for markets. This is what happens towards the end of a bubble. This is what happens towards the end of a macro cycle. The pumps get bigger than ever, and you're going to see periods next year where the pumps are absolutely massive and you can make so much money. And then there are also going to be periods where the dumps are bigger than ever, and it's going to scare everyone. And there'll be multiple periods where people think it's totally over during the year. I do expect overall, as I said before, the trajectory to still be up for risk assets. Equities will likely lead crypto due to crypto-specific factors which are currently limiting it, which we are just about to discuss as well with the USDT contagion and the China crypto ban. But overall, I think that is going to be the trajectory for markets. So just to wrap up this Japan segment here, it is a risk. It's something to be aware of. It's putting pressure on markets. We won't get more clarity until mid-December. It's something to be aware of, but I don't think it's a catastrophe that, is going to end markets overnight. We have seen this carry trade phenomenon pop up over the past few years, and there's no way to quantify the exact amount of debt that needs to be repaid. So it's very hard to work out the exact market reaction. It's just something to be aware of, and it's one of the reasons that can explain this dip in the market. Now, another reason we have had a bit of a dip in the market is due to this Tether situation. Now, it started with China's central bank vowing they're going to crack down on virtual currency. So they basically said stablecoins currently cannot effectively meet the requirements for customer identification and anti-money laundering and pose a risk of being used for illegal activities such as money laundering, fundraising fraud, and illegal cross-border fund transfers, the central bank said. Virtual currencies do not have the same legal status as fiat currencies, lack legal tender status, and should not be used as a currency in the market. All relevant government agencies should deepen coordination and cooperation, improve regulatory policies, and severely crack down on illegal and criminal activities, according to the statement. So, look, we've seen many times where China's come out and banned Bitcoin or banned crypto, but this is something to be aware of. We know that there is a significant contingent of the population in China that do use crypto and have supported crypto. We know a lot of the biggest exchanges are from China as well. It would be remiss of us not to accept that if they do crack down, and we're yet to see significant action since this was released, but if that does start to happen, it is going to have some sort of impact on liquidity. I don't think it's going to be the reason why Tether depegs or collapses, but it is something to be aware of, and this is another narrative that is currently playing into the market and suppressing it. Remember, markets often operate on narratives and sentiment more than the impact of news itself. Now, since then, Arthur Hayes came out and has kind of sent X into a bit of a frenzy because a lot of people are talking about this and said that he is concerned about Tether, essentially. So he said here, the Tether folks are in the early innings of a massive interest rate trade. How I read this audit, which recently came out, is they think the Fed will cut rates, which we are likely going to see, which crushes their interest income. If you guys don't know how Tether works, essentially they profit because they put the dollars that they're able to acquire into treasury yields. They're able to make money back 4 to 5% a year, and they're not paying out interest to users. So if you hold one Tether and they can have $1 real back in, they're earning the 4 to 5% on that dollar. So it's basically free money. It's one of the most profitable private companies in the world. It's a genius business model. But because they do expect their bottom line to be challenged a little bit, they're choosing to buy more gold and Bitcoin under the assumption, according to Arthur Hayes, this is of course, that in theory, these prices should moon as the price of money falls. Typically we've seen interest rates coming down, making risk assets respond positively, and obviously gold is also part of that debasement trade. Arthur points out though, a roughly 30% decline in the gold plus Bitcoin position would wipe out their equity, and then USDT would be, in theory, insolvent. I'm sure some large holders and exchanges will demand a real-time view of their BS so they can assess the solvency risk of Tether. Get out your popcorn. I expect the MSM to run wild with this, especially all the editors with TDS who want to dunk on Lutnick and Cantor for backing this stablecoin. So a bit of speculation at the end, but I do want to break down the speculation and work out, is he onto something? Is there a risk that Tether could be insolvent. And if they are insolvent, could this be a structural risk for the market? Because we know that USDT is the biggest coin in the market. A lot of people will just read this and dismiss it, but I think it's always important to look at FUD because you can highlight where the gaps are and you can use this to improve your own knowledge and also work out where the real risks are in the market. So I think it's important to address and discuss on today's show. So Paolo came out after Arthur Hayes' tweet and said, read the Tether FUD from latest attestation announcement from Q3. Tether will continue to maintain a multi-billion-dollar excess reserve buffer and an overall proprietary group equity approaching $30 billion. Tether had, at the end of Q3 2025, $7 billion in excess liquidity on top of their $184 in stablecoin reserves and another $23 billion in retained earnings as part of the Tether group equity. Tether group total assets, $215 billion, stablecoin liabilities, $184 billion. So you can clearly see there is a surplus here. They're not in a deficit. S&P made the same mistake of not considering, because there was a recent S&P downgrade, which has also put pressure on the Tether narrative, and I think it's led to some of this FUD, so to speak, of not considering the additional group equity nor the $500 million in monthly base profits generated by US Treasury yields alone. Some influencers are either really bad at math or have the incentive to push our competitors. Forever trusting who we are, no, nothing else matters. So pretty strong statement here from Paolo coming out and basically saying that they don't have a problem. I want to read out this tweet from Joseph because I think it breaks down things in a really easy to understand manner. And then I'm going to go through my summary table that I've created to wrap things up here and make you aware of the real risks and what I actually think happens from this. So Joseph says, I've spent hundreds of hours writing research for Tether for Citi. Crypto Haze missed a few key points. 1, their disclosed assets don't equal all corporate assets. When Tether generates money, they have a separate equity balance sheet, which they don't report publicly. The numbers they disclose are under a matching philosophy. They're just showing you how their reserves are backed. The equity balance sheet is made up of equity investments, mining operations, and corporate reserves, and possibly more Bitcoin, with the rest distributed as dividends to shareholders. Interesting point. 2, they're highly profitable and their equity is valuable. I think this is a really important point to be aware of because they are one of the most profitable private companies in the world. They can sell equity to cover any gaps in their balance sheet. And this is true. Even if they did even have a 10% gap at the balance sheet, Tether is worth billions and billions of dollars they should theoretically be able to raise. Of course, though, if they were in that situation, maybe their equity would be less valuable, but also there's the assumption that at some point you'll see rates rise again because these things are cyclical, and in that environment, they would become more profitable. The other thing is they've been able to stack cash and build up this reserve through a period where rates have been higher, so they've been able to build a cash buffer, which Paolo pointed out here. Tether has $120 billion in interest-yielding treasuries, which have been yielding 4% since 2023. That's around $10 billion in liquid P&L with little cost, 150 employees, making it one of the most efficient cash-generating businesses in the world. I'm guessing this would make their equity worth somewhere in the $50 to $100 billion range, although they've reported they're looking to raise $20 billion for 3%, which would put them at a $500 billion valuation. Probably won't materialize and likely overvalued, but still highly valuable equity. And the final point here, before I get to my summary, banks operate on significantly lower fractional reserves. 5 to 15% of banks are held in liquid assets. The other 85% are held in significantly more illiquid assets. Tether is different but holds similar qualities to a bank in this regard and is significantly better collateralized. Actually, technically over-collateralized, not even including equity and the extra buffers that were pointed out here. A key difference is banks are backed by lender of last resort, central bank, but Tether is not. TLDR, Tether isn't going insolvent. Obviously, there's no proof of that. Quite the opposite. They own a money printing machine. So this is how you can separate the signal from the noise, and then I'm going to give you my opinion on Tether. Firstly, you had the FUD narrative. So we had the S&P downgrade, rating Tether weak due to their Bitcoin and gold exposure, which they obviously don't deem as safe as treasury bills. Then Hayes came out and said that a 30% Bitcoin crash could wipe out their equity buffer. Obviously, that isn't accounting for the factors that we just discussed. The on-chain reality is that they have 215 billion assets, they have 184 in liabilities, and they have a net equity position of 30 billion. Essentially, what this means is they have a $30 billion cushion, not including if they raised, which is significantly higher than previous cycles. So Tether, although they're bigger than ever, they also have a bigger cushion than ever, and they're also more valuable as a company than ever compared to past cycles. And we've seen many examples, which we'll get into in a minute, of Tether FUD over time. We've only seen the market go higher and higher after that. So my opinion is that Tether's a money printer. I wouldn't be concerned about it, but I would accept that if Hayes is right, there could potentially be more news stories about this. There could potentially be more FUD about this. And if interest rates do cut down even further, which we think they will, there may be a bit more pressure on Tether, but in my opinion, it's nothing that they can't handle. Tether's obviously the biggest stablecoin in the space. It accounts for over 60% of the total stablecoins in the space. They're a massive company. They're a highly profitable company. I wouldn't be concerned, but obviously as an investor, I would diversify. Don't have all your assets in Tether. You know, when you're trading, you can look at using alternate pairs as well. There's USDC. There are other great stablecoins. Diversify, but don't panic. And if this does lead to further downside, then that could be a buying opportunity. I mean, we're already seeing a dip across the market now, but every single time, essentially, there's a Tether depeg or Tether FUD. Obviously, there was even FUD last year about, the lack of transparency, given, not sufficient audits. That had ended up marking all of these events local bottoms to see the price of Bitcoin and markets obviously go higher. So oftentimes when there's Tether FUD, this marks local bottoms. And if I was on either side of the trade, I would lean towards this side of the trade. But I do think, as I mentioned earlier in the video, there are factors at the moment which are suppressing the market, which is going to make the recovery for Bitcoin overall take a little bit longer. But heading into next year, where there should be positive liquidity conditions, I do think you will see a period of expansion where the narrative turns for Bitcoin. As I mentioned in past videos, I don't think this is a 4-year cycle situation where we've just started a big bear market where Bitcoin comes down and down and down and down for the entire year. I do believe that Bitcoin is a macro asset. It's reliant on global liquidity. So the way to dictate the Bitcoin trend is to understand where global liquidity is going to flow. And it's probably going to be positive next year, albeit with increased and heightened volatility. Hope you enjoyed the daily show today. I'll be back tomorrow. Remember, put the notification bell on, comment Noti Gang in the comments below, and in tomorrow's video, if you watch it, I'll be selecting 5 comments to win $100 each. See you in the next one. Have a lovely rest of your day. Peace out.